Hello, good morning, good afternoon, good evening, or maybe good night to some people. Wherever you're watching this from, my name is Shola Adesakin, and I'm the lead coach and founder of the Smart Stewards. I have with me my gist partner and one of our coaches at the Smart Stewards. He's also the founder of Part to Know is an investment and personal finance enthusiast. So Mayowa and I could talk about money like for 2 days nonstop. Okay. But today we have such an interesting topic. A lot of things have been happening around the world in terms of investments, crypto, stocks. I came across a few images some days ago, and I'm like, everywhere seems to be, a red sea. Like it's been red, red, red across, the different asset classes. So I thought my one I should, talk about, how to remain cool, how to keep your cool, even when investing seems uncool. How are you doing, Mayowa?
Good morning, Coach. Good morning, everyone. Good morning here in England. If you're in Europe, good morning. If you're in America, I think probably you're still in the middle of the night or just waking up. Every other part of the world, good morning, afternoon, good evening. It's been lovely to be here on this Monday morning. It's been an interesting 4 to 5 days, and I can't just wait to get started because I can't wait to get started. So I'm fine. Everyone is great. I know. How are you too, ma'am?
Well, I'm in a great place. Thank you. It's a rainy day here in Lagos, Nigeria, right? But we're keeping ourselves warm and we're trying to also catch up with what has been happening, around the world, like I said, in terms of investing. So I've been on Twitter this morning and a lot of people have been cursing Elon Musk, like swearing for him. Like, he says just one thing and, there's a lot of movement upwards, downwards, backwards, in the crypto market and all of that. Which brings me to this conversation. So, even though we are going to be dissecting what has been happening in the investing climate, so to say, but the real focus of this conversation is, that behavioral aspect of investing, that ability to keep your emotions in check, irrespective of however the market is functioning. Hence the topic. How do you remain cool? How do you remain unperturbed? How do you remain calm even when, investing is unpleasant? And let me start by saying that, you know, I know that emotions drive our decisions and especially, even our money decisions. I was doing a course, and some of the things we were talking about was the fact that, you know, there are negative emotions, there are positive emotions. Part of the negative emotions that drive people's decisions in the world of investing and personal finance are fear, greed, anger, and shame. And I could relate with it because if you belong to groups where crypto is, the main subject matter, a lot of emotions have been flying up and down my right in the last few days. So, do you agree with me that there's always that behavioral aspect to investing, and that our decisions are, largely driven by our emotions? And what sort of emotions are we meant to have? Are we meant to kind of cultivate around now? And especially when, investing does not seem to be pleasant.
Thanks, Kochi. One of the things in which we all know, which about the market, and when I'm talking about the marketplace now, I'm talking about the marketplace as a whole. There's this saying, they said the market is very irrational. And that is why all through time, nobody has been able to consistently, over a long period of time, to predict the market. No one has got a crystal ball. Why is that? When we talk about markets, we're simply talking about the people in the market. There is no market without the people. And it is actually human beings that are very irrational. Why is that? Because humans, we are not robots, we are not computers, we are human, we have emotions. And anywhere there is emotion, one thing about emotion there is emotions are not static, they change. And when emotions change, it affects your decisions in almost every area of your life. So the point there is about you. Number one is you need to recognize that factor that market is driven by humans. Humans are driven by emotions. So that's one of the things Warren Buffett says. It wouldn't take long before a very smart Harvard graduate, who is a CEO in a company, does something stupid or say something stupid. The whole market will react, and then they will take that opportunity. And one thing there is, number one, no, that is the key. That's the problem there. The problem is no longer the knowledge. Forget about it. The internet age is actually giving us a plain level. No, information is no longer anybody's saying, "Oh, my core competence is my knowledge." No, it's readily available. A few clicks, you get it there. The point there now is your ability to now tune off from that mainstream information, because whatever you hear, you cannot unhear it. That is why you'd see people who want to control their emotion, they limit their exposure to a lot of things. We are human beings. The soul realm of the human being is what I call, it picks up anything you expose it to. You don't control it. That is the way it's been designed. That's why when you walk in and you smell a perfume, you did not go to ask for the smell. You pick it up, it comes into your environment. The only thing you can do is to control the environment you put yourself. You control what you expose yourself to. When you control what you expose yourself to, you can now control how you react. Because the willpower, like they say, like in popular saying, there is willpower is limited. So if you wake up in the morning and you've exhausted your willpower so much, and by the time you get home and you switch on the news and all the analysts, all of them seems to have, everybody seems to be able to see what's going to happen tomorrow, and they're all saying that. At that point, you don't have enough strength to fine tune yourself. Before you know it, that's why most financial mistakes people make happen at night, in the evenings, when they get home, when they don't have that capacity to control themselves. So once you understand that is the way things work, now puts in place systems that allows you to actually not fall prey of that which everyone is susceptible to. Everyone will fall into that. We humans, it doesn't matter how controlled or how disciplined you are, at some point you will hit your vulnerability. That is why people create systems around them. You will fall to the level of your system. So if your system is being designed such a way whereby it actually maximizes your ability to control your temperament, then you stand a better chance.
Just as you were talking, so many things were running through my mind. And I know in recent times, cryptocurrency is becoming, a household name, so to say. Everybody's talking about crypto, but this is not about crypto. We have an upcoming webinar for members of the Smart Investment Club, this weekend, and we'll be going into crypto. But you see, two things I have realized in the world of investing. Yes, I know this conversation is, about emotional investing and putting the right systems in place so that you are not swayed here and there by whatever is happening in the market. An example comes to mind, and I think a lot of people still do not get the concept of investing well. I remember a few years ago, no, not a few, well, maybe about 13 years ago, somebody mentioned a particular investment type. And the person said, "Oh, this is this investment. If you do it in like 3 to 4 weeks or 6 weeks at the most, you're going to be getting about, 300% or something funny." So I spoke to my sister or a friend of mine overseas. We put money together. I didn't understand the dynamics. I didn't even ask questions. But because the person said, this is what is happening, and you stand to gain a lot. So I put my money in, and of course, it was a Ponzi scheme, which was what we're talking about last week. And I lost money. And my immediate reaction and response was to hold that person responsible and to blame and blame and blame, which is what a lot of people do. So remember that when we started this conversation, I was saying that four negative emotions that drive our money decisions, even though they are positive emotions, but the four negative decisions are again fear,
Yeah.
two, greed. Now,
Great.
fear is example, crypto is what is happening. Oh, and then somebody says, if you are not doing crypto now, you are losing out, you are blah blah blah. And you're like, you are not ready to, you know, take precaution. You're not ready to learn. You're not ready to find out. Boom, you pick or pull out your retirement savings or your money for rent or money for your children's school fees. You put it in it. So let's say you got into the market just maybe like last week Thursday, and then the market tanks and things are going haywire. Your reaction will be, oh, this person led me into it. And what was the fundamental reason? Fear of missing out.
Missing
You
out.
see? Now, another one is greed. So somebody tells you, like yesterday, I was talking to somebody and he showed me his crypto, whatever. I mean, he's got 7 digits figures, like, and he said he started with only small money. My reaction could be, oh yeah, show me, show me, show me. I have some money somewhere. Let me put it into it because of the greed. Do you understand? Another reaction is shame. Another emotion is shame. So because everybody is doing it, if they ask me, what am I going to
What to
say?
say?
You put your money into it. And then the final one is anger. Maybe you just wake up one day and you realize, where have I been? All of my life, everybody is making money. What have I been doing with my finances? Then you get angry. You know what they call holy anger. And then you want
Ah,
to achieve in 2 days what you haven't done in 10 years. Then you
yeah.
put your money into it. Do you see?
Yeah.
So I like the fact that you talked about having the right systems. And I think that system is a function of what you know. System, the systems you put in place in your life, not only your finances, marriage, relationships, career, would be a function of what you know and a function of the level of your awareness. And this is what we preach all the time. What do you know about investing? What do you know about personal finance? Now, before, so gone are those days, I just told you an example about how I put my money into something because somebody said, oh, you would get 100% in 6 weeks. And I continued to blame him for a number of years. But these days, I think I have learned a lot. I have worked my money muscles such that if you tell me to do something, number one, I won't be forced into doing it. Even if I feel pressured and I do it and something happens, I will not blame you. I would not start accusing anybody because, number one, I have a great amount of awareness about investing, about myself, right? About what I would like to put my money into, about the fact that, you know what, I am willing to take as much risks. And if anything happens, well, I take responsibility for it. So, see, this emotional side of invest, because a lot of people, even before they start to invest, they have the wrong mindset about it. They are asking you, are you saying if I put my money in this thing, I will not lose it? What if I lose it? What happens? So, you see, the essence of this conversation is just to help viewers understand that we naturally take decisions based on our emotions. And if you do not deal with your emotions based on knowledge, if you do not set the right systems in place, if you do not understand the dynamics of the externalities, what is happening, and what you have control over, you're likely to make the same mistakes. You're likely to blame people all of the time. So that's the essence. So going back to what has been happening, Mayowa, I know you are a crypto enthusiast, you are an investing enthusiast, you are a risk taker. I know. Now, how do you manage your emotions in the wake of how the market is faring? When you look at your portfolio and you realize you have lost about 200%, 300%, how do you manage your emotions, and what have you done in time past, to just help you settle into whatever is happening without you, uh, castigating yourself, castigating people, or pointing, the accusing finger at people. What have you done? And, have you been able to work the muscles?
Yeah, thanks, Koshi. With crypto, I'll start with crypto, and with crypto, I would just use that as a yardstick for any investment you're going into. The first thing there is, the word is investment. I am not a trader. I am not a speculator. I am an investor. And that is, before I invest in anything, I want to understand what are the fundamentals.
So true. So true.
What are the
That
fundamentals?
that trading versus investing thing. I think a lot of people want to trade.
Yeah.
They do not understand the dynamics of investing. Please go ahead.
People think, oh, Bitcoin is done this, but it's done it over a period of time. People say, oh, digital currency can give you this percentage. Yes, it can give you that, but not you. We've got some coins that they will go crazy 300% a day and they will crash. Those are what they call anomalies. When you're drawing a graph in statistics, they are called outliers. You ignore them because why? They don't happen every day. They don't happen to everybody. So when you're taking statistics and knowledge, don't pick the outliers. Don't read something on the post that somebody who made in space of 2 weeks, they made $1 million from £1,000. It's possible in crypto world, but those are very rare occasions. And the first thing is, I'm an investor. Now, like we normally teach in Smart Stewards is, for you to invest, you have an income. From the income, you take your expenses, you now take it out. The most important thing next is your emergency fund. If something happens, what do I go into? I made sure that was in place. The next thing there is another buffer as well, because COVID has taught us that your small emergency fund won't go anywhere. That is in place. Then I will now say, this is what I have to invest and what is my investment strategy? How do I diversify? The next thing I now do is I put it into percentage. And that based on my risk temperament. Okay, let me allocate 30% of the amount I have available to invest. Not all the money in my account, not all my savings. No, what I have available to invest. I now break that down into fixed assets, into this, into that. And so whatever is left to go into the crypto world is what I put into the crypto world. Though recently I adjusted the percentage a little bit to benefit from what is happening in the crypto world, but still, it is still within my parameters. I can still control. So in the last 4 days, when the market was falling, fine, I looked at my portfolio, it's dropped 30, 40%, but I'm not moved. Why? I am in this for a long term. And when you look, even in stocks, when you look at the daily graphs, it's like you have a heart attack because you see that graph go brum, 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 brum. But when you look at it over a period of time, it becomes what? You see the trajectory. It keeps going up. And that is what is happening in the digital world. Everybody keeps saying, oh, Elon Musk is this, Elon Musk is that. He is a person, fine, he's a billionaire. And if he speaks and nobody reacts, nothing happens. Digital market is bigger than Elon Musk. Crypto world is bigger than Elon Musk. He will talk, his followers will react. However, one strategy I devised, which I was speaking to one of someone within my knowledge of, my circle of knowledge, money yesterday, was 2 days ago. I was like, I have begun to use Elon Musk as a strategy. Whenever I say something, I back the other way around. So in the last 2-3 days, when the market was going down, what was I doing? I was going around looking for what? More money. Why? Because that is where you get value in the market. If you can buy a product that is normally at 0% and it drops to 35, and I buy it at minus 35, and I wait for it to get back to normal, already I've made 35%. And that is where good investment knowledge comes in. You buy when everyone is selling. You don't buy when everybody is buying, because why? It's at a premium rate. If you buy Bitcoin when it was around $60,000, right now it's half the price.
Mm-hmm. Right.
But if you that is my strategy, and I make sure sometimes I tweak it every now and then. But what I tweak is my plan. I tweak my tactical response. I don't really change my strategy that much. I review it because knowledge is important. I review, I re-strategize, but it's still within that particular ring fenced of this is my investment pot. This is what I can play around with, which if anything happens and it doesn't rebound in 3 years, I'm still okay because the market could be like this for the next 6 months. But one thing about life is anything that goes down comes up.
Go up.
Anything that comes up does what? Comes
Down.
down. That's it.
Awesome. I love it. So, what I hear you say is, first of all, from your income, remove your expenses.
Yeah.
And you say why people get worked up. I'll tell you why, because I've done it in the past. You do not properly plan your finances. So, what people do is that income, that exact income, no plans for expenses, no plans for need to have or nice to have expenses, no plan for emergency funds. They just collect their salary, come, investments, crypto. And then, because somebody has promised you, I know we can trade for you, we'll give you 100% in 1 month. And then you're approaching some people even borrow. And then you're approaching the end of the month, the money is not forthcoming, the capital is not forthcoming, even the return is not forthcoming. And then you see people saying, I want to die, I'm having high blood pressure. But I see what you said, which is what people should adopt, which is the right thing to do. From your income, remove your expenses, remove emergency funds. Then you have a percentage left for your saving and investing, right? From even that investing budget, don't go and put everything in one asset class. So because everybody is saying crypto is the way, you go and put all your investment money. You may not go hungry at the end of the day, but you will lose that funds, in just one asset class. So it is good. I hear you talk about diversification as well. So for those who are new to investing, digital currency is not the only type of investment. If you are being in the Smart Stewards or the Smart Investment Club by now, you should know what the other asset classes are. You can do equities, you can do cash and cash equivalents, you can do fixed income securities. Yeah, low risk, low returns, high risk, high returns. Which takes me back to the other thing you said. You know your risk temperament. If you are conservative until you work the muscles, don't go and do high risk instruments. Those are the things that work you up in terms of emotions. You see, my own take is that, if you do not want to stress yourself in this world of investing, two things: have the right mindset, which was where we started from, right? Get to understand investing, get to understand yourself, have the prerequisite level of awareness, not just about yourself, but about the market. It takes time. And then the second thing is what I would call long-term planning. And I hear you say that as well. You are an investor and not a trader. Now, a trader is somebody who wants to put money in something and they are asking you 2 months into it. Can it become 100%? Can it become 800%? You are trading. I have traded in the past. I remember an experience. It was even my stockbroker. Be careful who is also advising you. Oh, my stockbroker told me, there's this very penny stock. I know there are no penny stocks in Nigeria, but all those 2 naira, 1 naira stock that has the potential of going up by 100%. Now, imagine if you put like 5 million in a stock that goes up by 100%. What that means is that you get 10 million in like 2 days. So the person told me about it. That was a few years ago. And I was, wow, why not? So I put my money into it. The first time we made the money, cool cash. Then the second time, the emotion of greed comes in immediately.
Yeah.
Because you have made so much money, you are like, gosh, this is life, this is bliss. Then you go in almost immediately. Traders, They are hardly content or
Yeah.
contented, so to say. They want to keep making. So I went into it the second time. You see, it did not only wipe my returns, it wiped my capital. And I just took my loss and learned my lesson. So if we are talking about investing, investments, being an investor means you're ready to be in it for the long haul. There's a fund manager managing my funds, and I look at their fact sheets, I look at their records. They have been in it for 24 years. You see, I'm ready to, I've built the muscles, worked my investing muscles to an extent that I put my investment, I literally forget it. I was thinking about an investment I had somewhere, and I'm like, in 3 months, I haven't even checked. You see, building the muscle. So, talking about this emotional investing thingy, two things from my end before I ask Mayowa for his final words. Number one, change your mindset. Your money mindset is largely influenced by what you know, right? What are the things driving your emotions? Replace those four emotional issues I mentioned with the right mindset, contentment, right? What's the opposite of greed, Maya? Yeah,
Opposite of,
contentment,
yeah,
greed.
contentment. Yeah.
So, contentment, have an abundance mentality, patience, I think is another virtue, which is what a lot of people don't want. And like, was it Dave Ramsey that said that this personal finance thing is a marathon,
Yeah.
it's not a
Not a sprint.
sprint. And don't just focus on what you can gain in like 1 year or like 2 years. Are you ready? I know somebody who has held Nigerian Brewery shares for years. And 300,000 investment, I think, has now become about 27 million. You know, some of us, once it hits a high price, you quickly go and sell. But the person has held, yeah, sometimes it goes up. The portfolio, what Nigerian Brewery shares alone has in that portfolio is about 27 million long term. So patience is the game, patience is the word. And then invest for the long haul. Don't do invest. Those things will help you, help your emotions, help you build the muscles, help you build true wealth, in my opinion. So, Myra, what would be your parting words in terms of what is happening, what people should do, and how they can actually work these muscles so they are not, perturbed by what is happening all the time?
I totally agree with what you've said. Your ability to control your emotion. There's this thing they keep saying in the Greek, and it's all of it's know thyself. Know thyself. It's when you get to a point where you know yourself very, very well, then you make mistakes, but not that much. To me, I think it's a case of where people needs to come to a place. Number one, take personal responsibility. It is your money. If anything goes right, it's your money. If anything goes wrong, it is still your money. You've worked so hard to earn this money. Don't be so careless because of greed, because you want to. It's that's why people go to the casinos. Gambling is all about you want to take a high risk to get a higher return. But there's this something about that's why they say in Vegas, the house always wins. Whenever you win once, the rush you get from that winning makes you want to do it over and over and over again. And people just get trapped and people don't deploy the sunk cost. They feel I've lost this much. Instead of you stop your losing and turn away, they feel I'm going to keep trying till I make up what I've lost. No. In investments, if up till today you've lost so much money, fine, let it go. Revisit that point again. And don't invest in what you don't understand.
Right.
People are telling you crypto or LMX said this, he said that, and Bitcoin he said this and that, said that. Digital currency is way bigger than crypto. Is way bigger than, I mean, cryptocurrency is way bigger than digital currency. That is just just one small bit of it. If you understand the fundamentals of what I was speaking to a group and I said, look, we were in the information age before. Now we are in the artificial intelligence age, the AI. The game is changed. We are in the world where blockchain technology is driving almost everything.
Right.
Almost all the big companies, DHL. Why do you think when they come to your house, they take a picture of your goods immediately? An email sent automatically. Immediately, that's called real-time contracting, where you sat down there, both of us, we go into a portal and we sign the same contract, and that's called blockchain technology. Understand what you're going into. And to me, it's all about that is, and then you need to tune out more out of what is on social media. I go on social media, but to me, it's not the first thing in the morning. You know, it's you go on there, but you have to, your intake of information, you need to reduce it. The fewer your channel of information, the less confused you are. If you just Google crypto right now on Kochi, I'm sure you will see the hits. By the time you finish reading everyone's opinion, you're confused. What do you think you
I know.
know? What do you think you're sure about? You don't know anymore.
Right.
So to me, those are my key takeaways. Control your emotions. Go for knowledge and don't invest in what you don't know. If you don't know how crypto works, go and learn. Understand how it works. Crypto is not a money doubler. You can lose so much money than you can make.
And not just crypto, all the
Any
asset
asset
classes.
classes.
You know that this happens with stocks as well. Remember the
Yeah.
GameStop? Was it GameStop stock? Was
Yeah.
it GameStop or what's the name again?
Game shop.
Yeah, some game stuff like that. You know how people gamble. You know, they hear something about it and then they go into it and then they get caught up in it. So I think
Yes.
this particular point applies to all asset classes, whether you're doing agro, whether you're doing stocks, whether you're doing real estate, actually, whether you're doing anything. You know, those things Mayowa said apply. Understand it so that when you make mistakes, you bounce out of it and you be like, well, I'm adding to my experience.
Yeah.
But if you don't know about it, you feel so terrible. Like, who sent me? And when there comes better and genuine money making opportunities, you don't even touch it with a long stick because you have been burnt and because you do not understand the dynamics. So I agree with you. Awesome. So this has been interesting. We have a webinar coming up, well, depending on when you watch this video, May 22nd, 2021, we'll be having a webinar for members of the Smart Investment Club. And I think this is a good time to even talk about crypto when,
Yeah.
you know, the energy is low because, you know, when the hype is so much, well, I just want to put my money there. But now that the energy is low, people will be like, okay, teach me. You
Yeah.
know, they have the patience, the tolerance to learn, and then they go into it, you know, from a knowledgeable angle.
Angle. Yeah.
So no better time than to, you know, talk about crypto this weekend, and I look forward to it. Have a great day. Have a great time. Enjoy the market. Keep learning. All
Yeah.
right. Keep investing in what you understand and what you believe in and what your risk temperament can accommodate. All the best and God bless.
All right then. Thank you very much. God bless.